Bitcoin is taking a breather. After soaring past $124,000, it's now hovering around $113,000. So, is this a healthy pullback or a sign of trouble ahead? Before we dive deeper, quick reminder. If you want more fast news breakdowns like this, hit the like button and subscribe to Daily Briefcase. We work hard. Bitcoin slipped below $113,000 in the last 24 hours, dropping nearly 3%. Weekly performance shows a 4% decline, suggesting a temporary consolidation after recent highs around $124,000. In our recent shorts video titled Bitcoin and Trump's 401k Executive Order on August 17th, when Bitcoin was trading around $117,000, we highlighted analysts calling for a possible consolidation range between $114,000 $110,000 as a healthy reset before aiming toward the $130,000 area. But remember, analysts aren't fortune tellers. So let us know in the comments what you think of these predictions. Bitcoin is under pressure again, with fresh on-chain data showing weak investor sentiment, but also signs that whales are quietly accumulating. Let's break down what this could mean for the next move. Looking at on-chain data, the blockchain information tracking actual coin movements, we see some important trends. First, short-term holders, meaning investors who've owned Bitcoin for less than about 5 months, have sold over 20,000 BTC at a loss in the past few days. This could be a sign of weak hands panicking, which often happens during dips, but we don't know for sure. At the same time, large holders, or whales, are quietly buying Bitcoin, roughly 20,000 BTC post-dip, signaling confidence from big players. Another key metric is the exchange whale ratio, which measures how much of the coins moving into exchanges come from these big wallets. Historically, spikes or shifts in this ratio often hint at local market bottoms or major moves. Having said that, total Bitcoin balances on exchanges have been gradually falling, meaning more coins are moving off exchanges into private wallets. This reduces selling pressure and can act as a price floor. In short, if this data holds, while short-term holders are selling, whales are accumulating, and supportive on-chain signals suggest Bitcoin might be carving out its next bottom. Whether this signals stability or another leg down, that's the key question heading into September. And a quick reminder, if you want more fast, credible breakdowns on Bitcoin, crypto, and market trends, tap like and subscribe to Daily Briefcase for our full deep dives and updates. Now let's delve into an insightful piece by Siamak Masnavi and Aoyan Ashraf titled Crypto Bleeds Ahead of Powell's Jackson Hole Speech, 8 Reasons Why Traders Are Nervous. This article, along with several others linked in the description, sheds light on the broader economic environment influencing the crypto market. Market uncertainty is intensifying as we approach the Federal Reserve's Jackson Hole Economic Symposium. Traders are particularly cautious ahead of the release of the July FOMC meeting minutes on August 20th and Fed Chair Jerome Powell's speech on August 22nd, 2025. These events could provide clarity on the Fed's stance regarding interest rates, especially in light of recent inflation data and global economic concerns. At the same time, institutional interest in cryptocurrencies appears to be waning. ETF inflows have slowed, and crypto-related stocks are experiencing significant losses. For instance, shares of companies like Mara, Coin, and MSTR closed down 5.7%, 5.8%, and 7.4%, respectively, reflecting broader market apprehension. If you're bullish, Bitcoin's retest could offer a better entry point near $110,000. But if you're cautious, especially given macro uncertainty and profit taking, this dip could be a time to reassess exposure. Crypto and Bitcoin are experiencing a good amount of attention. The favorable policy environment could mean more upside, but we'll keep watching and doing our best to provide you with research and insight that backs our opinions. See you soon, and don't leave without tapping like and hitting the subscribe button. It's free.